Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 16th of December. Starting off with Blue Star Capital, which finally delivered for the bulls, which is always nice. It was a rather long and arduous, painful process, but we've managed to get up to even the highest, the more optimistic target there, 0.35, but after that V-shaped bull flag, something which you should remember for later in this particular video. In terms of what might happen next, we've probably got a little bit more on the upside, possibly with a line of resistance that one can draw from back in, I suppose the 2 years ago, up to 0.55 as a best case scenario. If you're slightly less optimistic, maybe the line is a little bit lower than that, maybe up to the 0.5 area. But I think that given what's happened here, it looks like a decent turnaround. So 0.5 to 0.55, while we hold above 0.35. Obviously, remember the proviso there, while above 0.35. Moving on to a stock which is not quite in the same type of zone, in fact, quite the opposite, but never say never with the recovery situation here. We had a low for Block Energy back at 0.9, well, around the 0.93 area back in April 2020. We've just had a little sort of a minor bear trap below that and just back up above that level. Also got bullish divergence there with the lower low that we've had for December and a higher RSI line, let's say. So that does suggest that we could turn around. If we do, and we remain above 0.93 on an end of day close basis, that gap down from last month at 1.33 could be the target for Block Energy. But just a flag there that there is bullish divergence there for Block Energy, with that new temporary low for the stock. Announcement today from Eurasia, which at in the sort of pitch dark at 7 o'clock this morning, I thought could have been the one, but not quite the one. But nevertheless, in terms of the charting here, looking pretty interesting in the sense that we had that bear trap down to 14 pence back in the summer. Then we've effectively had three tests for support near the 20 pence area. The third one slightly lower than the one in October. And a bear trap gap reversal, which is what we've got, can be a very strong signal. Just suggests that the bulls or the bears rather, are caught on the hoof. What we're looking for now really is an end of day close through that resistance line there from September 26, so let's call it even 27 pence. That's the initial target for the shares, but if there's no end of day close back below 20, then we're looking for 27 and then hopefully back into the 30s for Eurasia. So let's see how the shares negotiate that. Ideally, there's no break back below the latest gap floor at 22 pence. Bullish divergence there as well for the stock on that slightly lower December floor. Situation which is shaping up quite interestingly at the moment is GS Technologies. The reason for saying that is that we bounced off the 50-day moving average at 1.7 pence. Let's call it above that. We're looking for a return to 2.5 pence over the next 2 to 4 weeks, something like that. Seen the shares bounce off the oversold area, RSI 30, which has been a decent hunting ground for the stock on in the recent past, especially back in July, when that effectively signaled a move from a penny to 3 pence plus over the next few months. So hopefully the RSI rule there at GS Technologies will work. Onto a stock which is also improving against, perhaps against the odds. Guild Esports finally delivering, or at least stabilizing, let's say, higher low there versus the turn of the month, so above 3 pence. What we'd like to see here is a break of the 50-day moving average at 3.6 pence. An end-of-day close or a weekly close above that could take the shares at least back to 4.5, which would feel good, I think, after the torment that we've had in the stock from July highs near 8 pence, and obviously the best levels at 9 pence earlier, well, actually back at this time last year, in the autumn of last year. So long way to go for Guild, but looking better at the moment. On to i3 Energy, which has been showing some signs of recovery here. We've got that uptrend line there from January and the 200-day moving average, trading either side of that around 10.5 pence. We can stay above 10 pence, then looking for 12 pence plus initially, and then up to 14 maybe by the end of next month. If you're cautious, you wait for an end-of-day close through 11.5 pence, which has been recent resistance before anticipating a big move to the upside. Got a lot of praise for my coverage of Codal Minerals, which I think is probably undeserved, but I'm covering it again just in case I get more undeserved praise. Here you can see that the shares have managed to break back above the rising 200-day moving average. That's around the 0.295 level, let's call it 0.3. The normal rule with shares or markets that bounce or fall below their rising 200-day line is that the dip is a buying opportunity, which has been so far in this case. I'd like to see a decent weekly close above 0.3 and the 200-day line. That could take us back into the 0.4 to 0.45 area, maybe sometime next month. So something to watch out for or watch at over the near term. On to Open Orphan, which continues its recent, we call it sort of bear trap below the 20 pence area, and especially below the 50-day moving average at 20 pence. Above that line at 20 pence, looking for the shares to head up to the top of that broadening triangle from July as high as 30 pence by the end of next month. The neckline resistance there around the 22.5 pence level. So an end of day close or a weekly close above that could be a decent trigger for a move towards 30 pence, which has been long awaited. On to Pires, which I interviewed, or at least released an interview on earlier this morning. Here we've got a couple of things to look at. First is that uptrend line there from April 2020. We bounced off that around the 4.55 pence area, which is one positive move. We've also been very oversold, and if you look at the last times the shares have been in the sub 30 area on the RSI scale, they have tended to rally at least by sort of 30 to 50% in the case of the move from November last year. Obviously that was much more, and we also had a decent move when we were oversold from March 2020. So let's see if history repeats itself. Initial target here up to 6 3/4. Ideally we head back to about 8 pence by the end of next month, and ideally also we stay above 4.5 pence in the meantime. On to Poolbeg Pharma, which has made an announcement about oral vaccines, which should be the new rock and roll. I did cover the shares, I think either yesterday or the day before, on the basis that there had been a narrow bear trap from below 8.4 pence. That was a sort of 2-day wonder. And there's also been bullish divergence in the RSI window. So all the things that I like came into play there, the bullish divergence especially, and the bear trap. The final thing that I like is a bear trap and followed by a gap, which is exactly what we've got today. And just to add to the excitement, we've broken that line of resistance from September at 9.25 pence. The longer we stay above that, the greater the chance of at least a move back to sort of the 10.5 or 11 pence area over the next couple of weeks. Quantum Blockchain is probably gets the award for my sort of pet favorite company, just on the basis of the quantum computing idea. Here we're looking for the shares to break that line of resistance at 3.2 pence from back in October. If we can do that on a weekly close basis or over maybe next week, then we could be heading towards the top of the rising trend channel from the beginning of the year. Currently pointing as high as 5.25 pence, maybe over the next 1 to 2 months. Upside valid while we hold above 2.5 pence. Finishing off with a stock which I rarely look at, but here it is today because the chart is sort of irresistible. Shield Therapeutics gapped out of that falling wedge that it's been in since July, and above the top of the wedge at 33 pence, we could head back up towards 50 pence plus, maybe by the end of next month, powered by the initial December bear trap and the gap higher that we've had, and also the way that we've come off very oversold territory, which combined with the other, the gap and the falling wedge breakout, should be a reasonable setup. That's it for me today. More updates tomorrow.